All right, we should be live here in a few. Let's see if we get any viewers here in a minute, and then by 3 o'clock, we'll start chatting a little bit about again the current interest rate market, kind of where things are, what we've been seeing currently over this last 12 months in the real estate market, specifically locally here in town, and then how those interest rates have been affecting, um, obviously our buyers' strategies, their buying power, and then, of course, how we're trying to set them up for success moving forward once they become a homeowner and get into that home. So, we have a lot to talk about. We're also going to talk about mortgage refinances, what exactly that means. I don't think enough people understand, nor as should you, right? If you're not a homeowner yet, what exactly a mortgage refinance is. So it's our job, of course, as the local mortgage experts to educate you, explain to you what a mortgage refinance is, why it's so powerful, and why almost every homeowner, I would imagine, over the course of them owning a home, has at the very least explored the option of as rates fluctuate, right? As interest rates come down from where you're currently sitting on your current mortgage, is when a mortgage refinance starts to make sense, obviously. There's many other reasons why a mortgage refinance would make sense. We'll chat a little bit about that as well and just again help educate you and give you the tools and the ability to make these decisions while understanding what these concepts and processes mean, right? So that's what we'll do today. We'll have a little chat here in just a bit. Let's wait until 3 o'clock, which was the official posted time for what we are going to talk about on social media. So we'll see you here shortly. Also, if you're here, please make sure to try and say something, type something in the chat through the Instagram and Facebook Live platforms. You should be able to. And I think we're also live on YouTube and LinkedIn and a couple other places. But if you are here, just say hello. I appreciate you guys stopping in. Thank you very much. Uh-oh, apparently well, hello, Christian. What's up, sister-in-law? I don't think for some reason my freaking Instagram was able to connect. Huh. I'll have to take a look at that in a bit. But okay, we've got YouTube, we've got Twitter, we've got LinkedIn, and of course, we've got the holy girl of them all, Facebook. So we should be good there. We should be good there. Yeah, this weather here is crazy right now in Vegas. We've got storms coming in. We've got a wildfire. I think there's two like wildfires or brush fires or something happening in California right now that's sending all of this smoke our way. Some crazy monsoon season weather for us, y'all. All right, let's give it about 10 minutes or so, guys. Again, I just want to make sure that we get as many eyeballs as possible from the different platforms that we'll be live streaming from. So just a few minutes here, and then we'll begin chatting. Again, today's kind of just topic of choice is going to be, of course, current market, interest rates, what that all looks like as far as buying strategies, and then, of course, what is a mortgage refinance for those of, well, again, many people that I'm sure are unfamiliar with what a mortgage refinance is. And I'll be after this conversation today, obviously this is being recorded. I hope, hopefully, I'm able to actually download a recording of this. It should be. It's being done through Restream. So after that is done, oh, hold on one second. I think I got a little double loop here. Okay, there we go. Anyways, I was gonna say this will be posted to and cut up into some more short form contents for the different social media platforms and then specifically YouTube. That way we can continue to help educate the community, educate our buyers, and try to provide as much value to our real estate partners as far as uh, you know, how to best attack these different um, these different roadblocks for many home buyers here in this market. So trying to tighten up the microphone here. So there we go. Actually, I wonder if I can. I wonder why my Instagram live feed. How? Instagram live producer. How do I pull up my Instagram live? Hold on a second. Instagram live producer code. Just checking 1 second, y'all, on my Instagram live. Hold on 1 second. About 7 minutes until we get going here on our chat. Maybe I don't have live act. I've definitely. Okay, I can definitely go live on Instagram, but where is create Instagram? Create. Interesting. I don't know. I'll have to look at more into that when we get off this stream because I can definitely go live on Instagram, but as far as restreaming, including Instagram, I don't know if that's possible. So I will look into that more later. But again, as of right now, we are live on YouTube, Facebook, LinkedIn, and Twitter, I believe. And we'll start our chat here in just a minute, guys. Give it about 5 more minutes or so. Just wanted to wait until the 3 p.m. timeline, and we will be ready to chat. Chatting about interest rates and what is a mortgage refinance. Also, if you're here, please let me know in chat. Say what's up. Let me know who's here. Let me know if you guys have any questions at all. Literally, I am here only to provide value and education and help our community as much as possible. I feel like there's so many unanswered questions when it comes to, you know, what is a rate buy down? What is a mortgage refinance? Is this beneficial to me? Is this not beneficial? So on and so forth. Where when you're working with a mortgage lender, mortgage broker, or a bank, a lot of times these questions are going unanswered, right? So you're going through the home buying process and financing and mortgage and loans, never really understanding what you're doing. And I know that because I get a lot of buyers that come to me, some already pre approved buyers or people that have even owned homes in the past that still don't understand these super simple concepts because they were never explained or educated during, whether they were pre approved or they owned a home before, from the person that previously helped them. So I do believe that owning a home and buying a home is one thing, right? That's phenomenal. That's all of our goals, so on and so forth. But understanding what you're doing, being educated on the process so you can do it as financially beneficial to you and your family as possible is paramount, right? Super duper important. So we're always trying to educate and help as much as possible. In addition to, of course, being the premier local mortgage broker here in our community that closes faster, closes, as easy as possible, with best relationships possible, so on and so forth. So it's an all-in thing with the Escobedo team. You know what I mean? Just a few more minutes until 3 o'clock, and then we'll kind of get started talking a little bit about today's topics and going over some of the notes that I have put together for us. So if you're here, let your boy know. Boom, ba-da, boo, ba-da, boo, boo. Another crazy day in the market, too, by the way. Sheesh. Oh, beautiful. A little credit karma update. Let's go. Always fun to see progress. You know, as we all know, credit is super important. I was going to say the most important thing in our financial life, but it could be argued. All right, I think it's close enough. 2:59, getting close to 3 o'clock here. So let's start chatting again briefly on. I want to talk a little bit about the current interest rate market. Of course, obviously, we're all aware we've been in a very high interest rate market these last 12 months since, of course, we had the epic, unprecedented, historically low interest rate environment of, the COVID era, right? Where we had zero, 0% interest rates from the Federal Reserve for over a year. And of course, on the mortgage end of things, is what pushed mortgage interest rates down into the 2% range, 2.5%, low threes, all of that for well over 12 months, somewhere in the 18-month range. We were able to hold those levels. As crazy as that sounds. So we're no longer in that world. Okay. We're all obviously aware that we're currently in one of the higher interest rate market levels that we've been in a long time. Definitely within the last, I would say, 5 years or so. When I originally came back into the mortgage business back in the very late 2016, early 2017, interest rates were somewhere in the, and this is mortgage interest rates again, interest rates were somewhere in the high fives range, low sixes range. Okay. So across the board right now, regardless of what lender you're using, bank you're using, et cetera, broker, bank, direct lender, et cetera. Now, this will vary a little bit from broker, bank, lender, depending on who you're choosing to work with and how much they're deciding to charge you, right? But for the most part, interest rates as of right now are going to be somewhere in the low to mid sevens, depending on, of course, the rate market that day and which lender you're choosing. Okay. So we're definitely in a higher rate environment than we've seen in the last 5 or so years. But again, like I said, at the end of 2016 or beginning of 2017, interest rates weren't far off from where they are right now. Okay. Again, like I said, remember they were high fives, low sixes, somewhere in that range, depending on what type of program that you're deciding to use. Uh, 5 or so years ago, right? Let's call it 6 years ago. So, with that being said, are interest rates at a level currently that, you know, 100% push buyers out of the market? Um, I would say no, nor should it, but it certainly discourages people, at least those that are not educated in the process or understanding of, again, what a true interest rate is. And then, of course, what, an actual mortgage is and what that mortgage looks like for that person or family over the life of whatever that mortgage is. Okay. So, should it deter you from pursuing home ownership, whether it's your first home or you're trying to buy your 15th home? I would still say no, obviously. Okay. Because I am a true believer that home ownership for the American public, right? The general American public is the fastest path to any type of personal wealth generation, wealth building, and just general financial, personal financial economics for a household. It is the best decision that you can make as an individual person, family, etc. Okay. There is no reason once you are able to pursue home ownership and become a homeowner, there is no actual reason that anybody could argue that renting will ever be better than owning. Okay. I don't want to get too into the weeds with that. And this is not what our conversation's about today, but there's just no argument that somebody could make that could make, that would have that make sense for the general public. Okay. Now, with where current interest rates are, where this market currently is, how does one navigate in a higher interest rate environment? Okay. So, currently, over this last 12 months, where we've been dealing with high interest rates, different lenders, different banks, there's been different programs made available. And of course, programs that are already available in this current market have become more popular in the way of 2-1 temporary buy downs, 1-1 buy downs, 3-2-1 temporary buy downs, permanent rate buy downs. All of these different elements and factors of a mortgage loan when purchasing have been, a lot more advantageous for buyers to take advantage, specifically in a market that like we've been in over this last 12 months, where because demand has been a little bit more quiet, we've had an ability, not as much in the last, I would say, 30 to 60 days, with, people starting to re-enter the market and with demand pushing a little bit higher. But we have had that every time we have had a buyer, you know, lowering their note rate, what we call note rate, the actual rate of the mortgage originally, via a either temporary rate buy down or permanent buy down, it has been paid for by the seller. Okay, so with seller paid closing costs that we've had an ability to take advantage of over this last 12 or so months, we've been able to get these interest rates bought down as much as possible for our buyers to put them in the most affordable loan as fast and as quickly as possible. Okay. So with the rollout of some of these programs, or the ability to use some of these programs to the buyer's benefit, again, whether that's a temporary rate or permanent rate buy down, we can get said homeowner into the home as affordably as possible. Okay. But first, let's talk a little bit about what these two concepts mean. Okay. What is a temporary rate buy down first? So a temporary rate buy down would be in the case of a 2-1 temporary rate buy down. It truly is obviously as simple as it sounds. Okay. So let's say, for example, you have a 7% interest rate that is the current prevailing market interest rate at what we call par. Okay. Par just means at a level where there is no cost or credit to the buyer for said interest rate. Okay. So at a par rate, let's just say we're using a 7% interest rate, which is an interest rate with no closing costs. Okay. Now, on a 2-1 temporary rate buy down. Now, I would say, 95% of the time, this is going to be done through seller concessions, okay, which are closing costs, additional closing costs paid for by the seller. On a 2-1 temporary rate buy down, your interest rate will be bought down by 2 percentage points in the first year and 1 percentage point in the second year. Okay. That means for the first 12 months of your loan, you'll be paying a total monthly mortgage payment reflecting a 5% interest rate, right? 2 percentage points below the original starting rate of 7%, right? So the first 12 months, you'll be paying a total monthly mortgage payment of again reflecting a 5% interest rate. Okay. I'll give you a very quick example just for rough numbers so you can get a guesstimate on what that would save you in dollar amounts. On a $400,000 home, that'll save you on a 2-1 buy down with today's prevailing market rates somewhere in the way of about $500 or so a month for the first 12 months. Okay. Now, the second 12 months in year two, your 7% interest rate would instead of 2%, it would be reduced by 1%. Okay. So that means in the second set of 12 months in year two, you're now paying a total monthly mortgage payment reflecting a 6% interest rate instead of a 7% interest rate. Okay. So, again, using the same example at a $400,000 purchase price, that's going to save you somewhere in the way of about $260 to let's say $270 a month based on the original total monthly mortgage payment. Okay. Now, in the third set, right, year three, as soon as month 25 comes, you no longer have an act, you no longer are in your 2-1 buy down, right? So you're just originally clicking back to what the original note rate, original total monthly mortgage payment, and all of that factors out to begin repayment of that original note rate total monthly mortgage payment. Okay. Now, the great thing about the temporary rate buy down, whether it's 2-1, 1-1, 3-2-1, we can go more into detail in that if people have more questions on what the other variations are. But one of the things I enjoy the most, or I like the most about this particular program and why it benefits the buyer so much, is because you don't lose those seller concessions or closing costs if you decide to refinance before the 24-month expiration. Okay, so let's say, for example, in month 13, right? You've been in your home for a little over a year now. You're going into the 13th month and payment, and boom, interest rates have now come down far enough to where you want to refinance the total mortgage to get whatever that prevailing market rate is at that time that matches a rate low enough for it to make sense. Okay. Well, you still have 12 months of seller concessions going towards that temporary rate buy down, and those seller concessions will then be applied automatically to the principal of the loan. Okay. So you're not being penalized for refinancing early, and you're not losing those seller concessions that are going towards the buy down. Okay. So on that temporary buy down scenario, again, if you refinance before that 24-month expiration, you do not lose those seller concessions. So, given the understanding that you could negotiate these seller concessions from the seller of a house using different strategies. And again, we can talk more about those strategies, whether it's this video or the next, but we'll certainly talk more about those strategies. But if you're able to negotiate those seller concessions and you want to attack the total monthly mortgage payment as much as possible, as quickly as possible, this is the primary way to do that in this current market. Okay. So, again, another reason not to decide not to purchase because where interest rates are right now. There's still a way to attack what your total monthly mortgage payment can be. There's still a way to attack what that actual interest rate, whether temporary or permanent buy down, can be. There's strategies, there's tools in place, and there's people to help you. This being a phenomenal example of one of them. So, over the last 12 months, I'd say I've had well north of 20 to 25 of my buyers purchase their homes with this in place, whether that's FHA buyers, whether that is my conventional buyers. They've all had an ability to take advantage of this program, um, through the negotiations of seller concessions and taking advantage of where this current market is. Hope that makes sense. First and foremost, I'll give just a few seconds here to, if anyone has any questions, throw them in the chat and I'll be happy to answer them. But we're going to talk a little bit more about permanent buy down here in just a second, while I wait for any comments in the chat. So let me know. Also, let me just reply to this text message here real quick. See, guys, we have another buyer right there tacking in this market and taking advantage of the temper or the 2-1 buy down. So it's a thing. It is definitely a thing. Okay, so we talked a little bit about the temporary rate buy down and how that could benefit a home buyer in this market dramatically and immediately when it comes to their total monthly mortgage payment and their immediate interest rate that they're paying, based on current market interest rates. Okay, perfect. Now, what is a permanent rate buy down? Okay, so in the way of the temporary rate buy down that we just discussed, where you have a temporary interest rate decrease for the first 24 months, a permanent rate buy down is what people are, for the most part, more familiar with. Okay, a permanent rate buy down is otherwise known as paying points. Okay. If you're paying points on your loan for an interest rate associated with that loan term, that is called a permanent rate buy down. Okay. These points are based on the total loan amount of the loan, and they are a dollar amount associated with a cost for a specific interest rate. Okay. So, in the way of, let's say you had, again, we'll use the 7% interest rate note rate example again, just to keep it easy with round numbers. Let's say, for example, you had a 7% note rate, which is your rate at par with no cost associated. No points, no nothing, no buy down, no origination. Just that is the rate that you're being quoted. And let's say, for example, it would cost you 1% in discount points, or again, a permanent rate buy down to secure, let's say, for example, a 6.75 interest rate. Okay. Again, I'm just using these numbers as examples for conversation in this video for us to discuss. But again, let's say that you have, that quarter point difference that is going to cost you 1% in discount points, 1% of your loan amount. So let's say, for example, your loan amount is $400,000. Let's say, or that's going to be $4,000 in a discount point fee or permanent rate buy down that will then lower that original interest rate by whatever that dollar amount deems justifiable, right? So a permanent rate buy down is, in fact, that it is permanent. Once you bought that original note rate down, it is fixed for whatever the term of the loan is that you're closing on. So let's say, for example, like most homeowners and buyers in our market today, you're taking advantage of a 30-year fixed mortgage, that would mean starting in month 1 through month 360, right? You have a 30-year mortgage. That permanent rate buy down would then be fixing that interest rate for the full 30 years. Okay. Now, does that mean that you have to have that loan or mortgage for 30 years? No, of course not. It absolutely does not. But it does, in fact, fix it to that loan if you do, in fact, keep it for 30 years or 360 months. Okay. So, again, a permanent rate buy down means that your interest rate is permanently fixed at whatever that bought down rate is for the life of the loan. One more time, you do not have to keep that same loan, obviously, for however long it is said to be the term is, because again, you can refinance at any time, generally after the 6 month mark or beyond. But we're going to talk a little bit about that more specifically after the interest rate discussion. But yes, permanent rate buy down is for the life of the loan. So, those two concepts, again, I feel like once explained like that in black and white, are pretty simple to understand. You have a temporary rate buy down where your interest rate and total monthly mortgage payment will be affected for a specified temporary timeline. And then you have a permanent rate buy down that will fix your interest rate and total monthly mortgage payment for the life of the loan. Does that make sense? Perfect. Again, two different concepts, but pretty black and white when understood and explained like that. Okay. Now, again, just a quick reminder how we're trying to leverage either a temporary or permanent. Now, in the way of the temporary rate buy down on the 2-1 buy down, unless you're buying it down via what they call LLPAs or loan level price adjustments through the actual lender, where the lender's paying for your temporary rate buy down, but the interest rate then reflects that by being significantly higher. You want to access and only access a temporary rate buy down via seller concessions. Okay. That's because the seller is paying for it for you, and you're not being penalized or paying a higher interest rate because the lender is paying it on for your behalf. So again, only take advantage of the 2-1 buy down, 1-1 buy down, 3-2-1 buy down through seller concessions. Now, on the other side of that, the permanent rate buy down can be attacked either from the seller concession side or from buyer's own funds. And then that becomes a discussion on what is the break even point on what's that cost of the actual rate buy down versus what is the actual amount of money that I'm saving in however many months it costs me to break even. Okay. So let's say, for example, it cost you, let's say like we were just talking about 4,000 bucks to buy a rate down, but you were only saving, let's say 40 bucks a month in difference. It's going to take you 100 months to break even, where that's not really going to be financially beneficial for you in a break even sense of, things, because given a timeline for actually refinancing and lowering your interest rate in total should be well before that 100th month mark. Okay. So that's what a break even point is between the dollar amount that it's costing you to buy something down or whatever you're choosing to do on that end, and what's the overall savings for said buy down, and how many months does that break even point meet with the actual initial cost. Okay. If that break even point doesn't align with your timeline or your buying strategy, the actual buy down, whether, permanent or temporary, might not make sense for you. Okay. This is another aspect of where these buyer strategies need to go, right? You need to have a game plan from the very beginning on, you know, how do you want to attack this loan once you're in it, once you're the owner of that home for the next year, 5 years, 10 years, 20 years, so on and so forth. These are big picture conversations that you should be having with your mortgage loan originator. Okay. If you're not having them with, the mortgage lender that's helping you, you need to maybe ask the real estate partner that you're working with to recommend somebody else. You know what I mean? You need somebody that is having these conversations with you and that's willing to offer the best advice and education possible for you and your family, so you not only can become a homeowner, but you can do so and empower yourself moving forward year after year through ho- you know through being a homeowner. Okay. um because again, I always kind of make this analogy to my clients where like your home is an actual living type of financial organism where everything can be, everything's moving all the time: interest rates, finances, debts, etc. So that home, you're a homeowner, right, is kind of like a financial living organism, right? If you can refinance to lower the interest rate, boom, let's do it. No problem. If you need to refinance to, leverage some of the equity that you've now earned in that house to pay off higher interest credit card debts or student loans or cars or whatever the case may be, boom, we can do that. If you want to rent that property out and purchase a new one and start building a real estate port, whatever the case may be, that house, once you step foot into that home, you've now stepped your first foot into the, big boy and girl financial world, where you now have an ability, another tool and avenue for you to start building on top of your finances. Okay. So again, this is why these partnerships with who you choose to work with are so important. And that's why making sure you choose a local expert in your community is paramount, guys. I will continue to say it, preach it, live by it, all of the above. So, okay, we've talked a little bit about temporary rate buy downs. We've talked a little bit about permanent rate buy downs. And I want to continue the conversation with talking a little bit about kind of, where do we see interest rates going in the upcoming? I feel like my mic keeps moving here. Hold on one second, guys. What is going on here? Okay, let's see. Mike, do not move anymore. Is it? I honestly can't tell. Okay, so we're going to talk a little bit about where we see interest rates going, kind of how they've been trending this last little bit, and what is moving the interest rate market the most outside of the obvious. So let's give it just a few minutes. If you're here, say what's up in chat. Let me know that you're here watching. If you have any questions, that's what I'm here for, to help. Let me just answer this text convo real quick from one of my real estate partners, and we'll be good to go. Please stop moving, Mike. Hold on. Tighten this bad boy up. There we go. No, it's still moving. Okay, fine. Hold on one sec, guys. Can my mic stop moving, please? I think that's a little bit better. Maybe I'll just come a little bit closer here. Hold on. All right, we should be good there. I don't know why extending the mic arm was a little bit crazy there, but all right. Anything above? All right, perfect. What else? What else, guys? All right, real quick, where do we see interest rates going? And, obviously no one really knows, nor does the most educated financiers and economists on Wall Street. However, the general consensus in the mortgage, real estate, Wall Street world is that we're going to start seeing lower interest rates sometime in the winter season, hopefully moving into 2024, where more of a recession type of environment. Not to say that we're going to be in an official recession. Nobody really knows that. We're not even sure if that we're already past that, if there even being a recession. But let's say in a recessionary environment, interest rates tend to cool even more. But we're all in the belief that we should start seeing some lower interest rates, hopefully by wintertime or again, early 2024. Now, what does that mean? Because it's not necessarily, it's not funny, obviously, but I have people all the time that, I come across people that, and I, again, always want to be looked at as your local mortgage expert. So even in the event that you're not even remotely close to wanting to purchase a house in the next, 6 months or whatever, I still encourage everybody, please reach out. Let me help you get started and at least starting to understand what buying a house means. This is the qualifying items that you're going to need to produce. These are the steps that we're going to have to take and put you through to be able to get you approved. And then once being approved, what does that timeline look like? Let me help educate you and bring you down that path, right? But I talk to people all the time that, want to become homeowners, purchase this and that, but they're worried about interest rates, waiting for interest rates to come down, waiting for home prices to come down, waiting for this, waiting for that, and they're just waiting, 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 and never pulling the trigger on anything. Okay, now what happened? This has happened in markets that we just came out of, right? We're talking about people during the COVID, era, pandemic era, where we had 2% interest rates, 3% interest rates, where yes, the market was very hectic and difficult to purchase a home, and because of the competition, I purchased my home during that crazy, crazy time with my wife. Purchasing our first home in September of 2021. It was absolutely ridiculous. We shopped for, almost a full year, as our family being the mortgage broker. So we had our financing 1000% rock solid, lined up, ready to go, and still had a difficult time during that time period because of all of the demand and the limited supply of inventory. Okay. So, anyways, I had many buyers during that timeline that wanted to wait, or they're waiting for the housing crash, or they're waiting for rates to come down even lower than lower than 3%. Whatever the case may be. Point of the story is that there is no better time to buy than when you're ready to buy. Okay. If that just means that you're going to make excuses for whatever you want until the end of time, that just means that you're never going to be ready to buy a house. It is what it is. You'll be a renter, you'll be living with a family member. That's that's your prerogative, your decision. And, that's how you decide to move forward. Now, in the event that you are actually serious about moving forward, when it's your time to move forward, trust me, you'll know it. You'll be ready. Okay. That means you're financially ready. That means, regardless of where the interest rate market is, where home prices are, where demand is, where inventory is, taking all of those variables out of the equation, when you are financially ready is when it's time to buy a house. Okay. Again, like we talked a little bit about earlier, buying a home is the absolute best, humongous step forward that every family at some point in time, generation over generation, decides to make to start establishing and growing their financial future. Okay. It's the best way that I can put it. Regardless of, again, where the current market climate is, it has nothing to do with your financial situation. If you can afford to buy a house, if you can have it financially make sense and understand what you're doing, You do not want to wait around for the market because the market does not wait around for you. Trust me on that. That's 100% gospel. It does not wait around for you. When these interest rates that we are currently talking about start coming down, okay, we are in the some of the tightest inventory levels that we've seen in ever. That demand is going to keep growing and growing and growing. And that means that those of us that already own a home, we get to enjoy what is called appreciation. Okay. That's another benefit to home ownership where the value of your house increases. That's what's called equity. It's the difference in what you're currently owed or borrowed on the property versus what the appraised value of that property is. As the appreciation increases, that equity footprint that you have in that home now also increases. So, whether you need to immediately tap into that equity or you just have the theoretical equity existing, that belongs to you. So rather than waiting, and of course, as those home prices go up, if you're not already a homeowner, you're the one paying those home prices that are now elevated. Um, you know, is entirely up to you. So that's a little bit about kind of the current interest rate climate and where we see it going. Yes, we do see, hopefully, again, nobody really knows. Anybody that tells you that they know for sure or that they can guarantee you that rates are coming down in 6 months or whatever the case may be, I promise you the most educated, well versed economists, financial experts, the people that you see on the television, on CNBC, on Wall Street, nobody knows for sure. The Federal Reserve doesn't even know what they're going to be doing with interest rates on a month to month, quarter to quarter basis, right? They have to track the data, and the data will make the decisions for the future, decisions that they make. So, yes, we may see interest rates start coming down, but as interest rates come down, remember, what does that do to the demand? Okay. Have you already had a difficult time trying to buy a house with the current levels of demand and inventory? Well, if that's the case, I would certainly try to commit to pushing a little bit harder and working with the right team to make sure you can get into a home. And again, I hate to use this saying, but before it's too late. Okay. So last but not least, what else is on the agenda here? Oh, we have a little comment from my boy Jamal. What's going on, buddy? Okay, supply and demand issue, tale as old as time. Better start building equity as soon as possible. Good info. Yes, I mean, it honestly is always going to be, it's the one financial concept that I think all of us learn in high school or even middle school. I can't remember exactly when we learned supply and demand economics, but it's certainly something that we've all, those of us, of course, that have gone through some levels of school have heard before, right? Supply and demand. As there is little supply, and again, that is one thing too that everyone is keeping the closest eye on possible is the supply and inventory of the real estate market, not just ours, but across the country. And I'm quite certain the same applies in every other country on the planet when it comes to real estate, right? Supply. Are they building more houses? They're trying. Are they being delivered fast enough to meet up with the demand? And is it affordable enough for those that need the homes to be able to afford them? I really don't know. It doesn't appear so. It doesn't appear that in the next 12, 24, or 36 months, we're going to have a level of supply built fast enough to meet the demand, even the current demand, let alone if interest rates were to drop. Okay. The reason that we don't have the resale of the homes that we once did is because I want to say that somewhere around the 40% range of all homes do not currently have a mortgage on them. Okay. So that means only about 60% of the homes that are currently built have a current mortgage, of which I want to say the last time I checked, it was somewhere in the way of those 60% of homes, like somewhere like 85% of those homes have an interest rate below 5%. Okay. You can drill down even further and what that percentage of people will have an interest rate below 3%. Okay. That is the one reason why you do not have the inventory that we once did, right? When people do not want to sell a home because it is not financially feasible, or, it just doesn't make sense for them to sell a home with a 3% interest rate, 3.5% interest rate, 4% interest rate, even a 5% interest rate in an environment when, you know, base par interest rates for the most part are somewhere in the 7% range, means you're not getting a replenish or refresh of inventory coming on the market every month, every quarter, even at this point year. Okay. So supply and demand is super important. Make sure that you pay attention to what your local market is doing, because remember, all real estate is local. A lot of my real estate partners have shared that little pro tip with all of us. But again, all real estate's local. Make sure to focus on your local market. Last but not least, let's talk a little bit about mortgage refinancing, what a refinance is. We'll be relatively quick about it. And again, I want to make more of these videos for you guys, do more of these lives, answer more of your questions kind of as we're going. But I believe that understanding concepts are the most important when becoming a homeowner or starting to make those strides towards home ownership. If you don't understand the concepts and you don't understand all of the moving parts of home ownership, how they benefit you, how they affect you, what they mean, um, it would be like, making a dinner for an entire family with no recipe and only a few of the ingredients that you don't even know that you need because you don't have the recipe, would be the best way to kind of like roughly chaotically put it. But that's kind of like how I would think about it. So, mortgage refinance, what is it? If you're here, tell me in chat, do you know what a mortgage refinance is already? Like how much do you know about a mortgage refinance? Running out of breath there. Man, this video better be recording. I'm sure it is, but sheesh. Mortgage refinance. So, like, how much or how familiar are you with what a mortgage refinance is, Jamal? I think I might be able to pop open. There we go. Chat overlay. Boom. Oh, this is only for new comments. Never mind. Mortgage refinance. So, this is, I believe, an under discussed even in today's market. Okay. If you buy a house, okay, if you bought a house in the last 12 months, especially in the market that we're in right now, and the mortgage loan officer, loan originator, bank lender, whoever you work with, didn't explain what a mortgage refinance is to you, then you were severely undereducated throughout your purchase. Okay. One of the most important aspects of my relationship building process with my buyers is making sure that they understand all of the key concepts and next steps once they become a homeowner. Not just to become a homeowner, but once you become a homeowner. Okay. You should never, especially in this particular market that we're in right now, purchase a home without understanding all of the tools available to you once you become a homeowner. Okay. Now, that biggest tool that's going to be available to you, again, to take advantage of that living organism that is now your house, your current mortgage, the real estate that you currently own, is a mortgage refinance. Okay. So a mortgage refinance essentially is a refinancing of the amount of money currently being borrowed in relation to what the appraised value of that home is. Okay. So, how that would work, you start your loan with a certain loan amount. Okay. Your home starts with a certain value, a certain appraised value. Your original loan that you're making your current total monthly mortgage payments on are based on these two factors: the original amount of money borrowed and the original appraised value. Now, let's just use Las Vegas and Henderson for example. For the most part, and I think this is possibly even a little higher here in our local market, but for the most part, you'll see anywhere from like 2 to 3% appreciation year over year on that real estate that you own, almost like clockwork. Okay. That's called home appreciation. That's one aspect of home ownership, right? Second is principal buy down. So, of course, as you're making your monthly mortgage payment, right? Just like if you were making a rent payment, you're paying $2,000 a month in rent, your mortgage payment is $2,500 a month, right? A portion of that mortgage payment goes towards the principal of the loan balance. Okay. So, the amount of money that you borrowed, a portion of that, of course, is going towards your principal. That is called principal paydown. Okay. So you first have appreciation where the value of your home goes up without you doing anything. That's home appreciation that contributes to equity. Then you have your principal paydown. You're making your regular monthly mortgage payment that is bringing your loan amount down. So now your loan amount is going down. The value of the home is going up. And the larger that this gap continues to get is again that equity threshold in the home. Okay. Now, the larger that gap goes, the more beneficial certain elements of mortgage refinancing become. So for a mortgage refinance, you can do several things. Okay. The one most obvious thing, which again, your mortgage loan originator that you're working with, that you purchased your home with, or that you've even had conversations with about buying a home, needs to be discussing mortgage refinances. Again, particularly in this market that we're in right now, because in this high rate environment, we should have an opportunity relatively soon to lower the interest rate. Okay. Now, this is one of the most important reasons to refinance, again, particularly in this market climate. So, mortgage refinance, lower the interest rate. If you're paying a current mortgage at a 7% interest rate and the total prevailing interest rate market comes down to 5%, you're going to refinance your mortgage to get the 5% interest rate. Okay. You don't have to do anything different or crazy or pay, generally speaking, on a mortgage refinance, what you're going to be paying, if you're working with the right lender, bank, or broker, what you're going to be paying are title and escrow fees. Okay. So you're going to have to pay title for a title company and escrow company to certify, of course, the new loan. And then you're going to have to pay if there's any property taxes due, any new homeowners insurance, because whatever the existing escrow balance is in your current escrow account, if you're escrowing property tax and homeowners insurance, will be refunded to you. Okay. So on a mortgage refinance, the only items you should be paying, unless you choose to buy a rate down even more aggressively in the way of points, the only thing you'll be paying are your title fees and escrow fees. Okay. Real simple, real easy, real clean. And on a mortgage refinance, any of those costs and fees can be rolled into your new loan amount. Okay. So, unlike an actual home purchase where all of the costs of that home purchase are out of pocket expenses, meaning you pay them at closing. So, your down payment, any closing costs associated, all of those on a home purchase are out of pocket expenses. On a mortgage refinance, they're included in the new loan amount. So there are no out of pocket expenses unless you decided that you, for whatever reason, wanted to pay them out of pocket so you don't pay interest on whatever couple thousand of bucks that might be. But I would say, in my many, many years of experience, nobody has paid out, on their mortgage refinance has decided to pay them out of pocket. So again, mortgage refinance, you roll them into the new loan amount, boom, have a new loan amount here with the new interest rate here that then reflects and gives you a new total monthly mortgage payment that ideally is significantly less than what you're currently paying. Okay. So doing a break even point on that based on whatever couple of $1,000 the cost of the refinance could be based on how much money you're saving per month based on the new total monthly mortgage payment over the course of, again, let's say it's a 30-year loan, 360 months is very easy to calculate. And as soon as you do that, you'll soon and quickly realize the benefit and advantages to refinancing that mortgage. So, pretty easy concept there, guys. But again, it is important that it's explained. So that again, in a nutshell, is a mortgage refinance and how that works in the way of just what we would call a rate and term refinance, where all you're doing again is refinancing the actual interest rate of the mortgage. You're not taking any equity out of the house. You're not trying to get any cash in your pocket. You're not trying to do anything like that. You're just trying to refinance the current interest rate on the mortgage. Okay. Now, another fun, I think pretty cool thing that you can do on a or really any refinance, but on a rate and term refinance is you can refinance to a desired term of choice. So let's say, for example, you've had your 30-year loan for 2 years. Well, on the new loan, we can refinance it to a 28-year term if you want to continue and maintain the same length of term that you're currently on. Okay. So, this is done if you just don't want to reset the timeline on the current, on the mortgage that you've been paying. You could, theoretically save the most amount of money per month if you're thinking about it just in total monthly mortgage payment, if you have the longest duration loan term possible. But, again, that conversation comes down to total monthly mortgage payment or total overall savings on the loan. Again, a lot of moving parts in your monthly in your mortgage, and that is best discussed with your mortgage loan expert, me. But again, that's pretty much rate and term mortgage refinance in a nutshell. And then comes the cash out refinance, because all of those things that we just discussed and talked about on the rate and term refinance apply directly to the cash out refinance. But on a cash out refinance, you also have an ability to, based on a new appraised value, borrow additional money based on that appraised value and what the current loan amount is. Okay. So let's say, for example, you built up enough equity. And when I mean enough equity in the house, what that means is, for the most part, on a cash out refinance, anytime you're trying to pay debt off or tap into actual physical cash to put into savings or other places, you need to have what's called at least an 80% loan to value or less. So that would mean that you would need a 20% equity threshold. That would mean that, let's say, for example, on a $400,000 house, your loan amount would have to be $320,000 or below to maintain that threshold. And then you would have tappable equity of the difference of any of the monies below the 320,000 and the loan amount, okay? Desired loan amount. So that would be a cash out refinance, and that's done by, again, leveraging and tapping into the equity available in the property at an 80% loan to value. I know that sounds like a word salad and a bunch of mortgage jargon, which I'm with you there, no worries. But again, that's why we're the loan expert, and we want you to at least be familiar with the concept to be able to ask the right questions, right? If you don't even know the questions to ask, then how are you going to make sure that you're borrowing as smartly and as intelligently as possible, right? So, as long as you understand the concepts and understand what is possible, it's not up for you to do it. It's just up for you to be able to ask the questions. Okay. Hopefully that makes sense on the cash out refinance front. Now, again, this is something that we, regardless of where interest rates are, we always are talking to our first time home buyers specifically, because for the most part, a first time home buyer is putting anywhere from 0% down for a no down payment grant, etc., to, let's say, about 3 to 3.5% down. Okay. When you're putting such a small amount of money down, right? You're putting a very little amount of money down. You're going to have truthfully, it's anything less than 20% down, right? So we're all, for the most part, I feel like most people, even outside of what a mortgage refinance is, most people are familiar with what PMI is, okay? That's because most people my age, their parents own homes or family own homes, and they know what PMI is, or they were familiar with back in the day where you had to put 20% down to buy a house. So, luckily for us, again, in this world, in this market, in these different times, we have many programs available to whether you're a first time home buyer or you haven't owned a home in 3 years or whatever the case may be, but you can put no or low down payment options. So, as your equity threshold in the property increases, now you're getting close to or at that 20% equity threshold. And let's say, for example, you're on an FHA loan, which is a government loan that will always have PMI, or what they call mortgage insurance. It's a protection to the lender for that particular type of financing. Let's say, for example, that you have that loan, you're going to 100% want to refinance once you're able and you've reached that equity threshold to remove that mortgage insurance, okay? Because that is just a dollar amount every month that you're paying as part of your monthly mortgage payment that goes to the lender for your ability to borrow that amount of money with less than 20% down. On an FHA loan, on a government loan, it's forever. Technically speaking, if you put down more than 10% on the FHA loan, it can be removed after a certain period of time. But again, government loan, uh, let's just move forward with the idea that it's forever. And then on a conventional loan, for the most part, you would have to pretty much the same timeline, go for anywhere from 9 to 12 or so years on an amortization schedule for the actual PMI to be removed organically or fall off on its own, which is why on a conventional loan, we also want to revisit and take a look at a mortgage refinance once we have enough equity in the property. So your FHA loan, your conventional loan. Luckily, for those of you that have served in the military, again, thank you for your service. You do not have PMI on a VA home loan. It's one of the major advantages of a VA mortgage. Again, you've earned it. Thank you for your service. But on an FHA and conventional loan with anything less than 20% down, again, we're always going to be revisiting, whether that's in 12 months, 24 months, 36 months, the fifth year, a mortgage refinance once you're able and once it financially makes sense. Whew. Lot of information, y'all. Okay, we've been live at literally exactly an hour now. I did not plan on being live for this long, and I hope that this video recorded, because I need to make some small clips and post to YouTube and Instagram stories and Facebook and all that fun stuff. But if you are here, or you have been here, I appreciate you chiming in, talking in the chat. Jamal, Kristen, thank you so much. If you are here, before I get going here, just let me know in the chat that you did visit and you did get something from our discussion today. I appreciate it. All right, guys, it was an absolute pleasure hanging out with you guys, talking, chatting. This is going to be something that we do very regularly, whether we're talking about the same thing again in more detail, answering more questions, or it's going to be new concepts that we have coming to you, new education, new tools, whatever we can do to help you succeed in this market is what we're doing each and every single day for all of our buyers and all of our real estate partners that we work with all of the time. The Escobedo team's been here in the Las Vegas and Henderson community since 1993, guys. A long time, over 3 decades. I'm second generation in the business, and I am only in this business to help and to help educate and help empower our community. So again, Mario with the Escobedo team, guys. Let our family help yours.